Hello everyone and welcome back. In this video, RioCan cuts their dividend by 33%. What does this mean for my loan? How does it affect my returns? And will I sell to invest in something else? We'll have to see how much this cut affects their dividend. But it's not all doom and gloom, as Bell raised its dividend by 5%. Will this increase balance out the cut?
No. No. No.
Well, hold on. Before you make any assumptions, let's run the numbers. And as always, we'll review the current state of my portfolio. Let's get into it. Back in May 2020, RioCan's CEO told investors the company's distributions were safe. He said, either the market has way overreacted on the downside, or there's this feeling that the world is so awful that they're all going to be cut. I could assure you that's not the case for RioCan. Fast forward 7 months and I received this email. RioCan cuts dividends by 33% to 8 cents. Although I would have loved for none of my stocks to cut their dividends, I was fully prepared for this possibility. During this pandemic, many other businesses have cut or froze their dividend, such as Suncor, H&R REIT, Wells Fargo, Disney, Ford, Carnival, AMC Entertainment, to name a few. RioCan's large exposure to commercial business is a key reason why their dividend is being cut. Many businesses have suffered this year, and a fraction of those companies have declared bankruptcy and won't be returning to RioCan's properties even when the economy recovers. So let's take a look at the damage. I have $15.5 thousand invested in RioCan. In the past, they've paid $121 per month. Now that their dividend was cut 33%, let's change 12 cents to 8 cents and there, $81. From $121 to $81. That's a $40 difference. Is this decrease enough for me to sell RioCan? Not at all. Like I said, we're in a pandemic and cuts are to be expected. I think I've been lucky to only have one company cut its dividends, and it's not like it was cut entirely, only 33%. There are many reasons to sell a stock, such as the business changing and you no longer have faith in the company. But that didn't happen here. RioCan cut its distributions because of the pandemic. They said they will use this money to fund other projects and continue their shift towards more mixed-use properties rather than largely commercial. So I'm still very happy with RioCan and will continue to hold my position for the foreseeable future. Thankfully, it's not all bad news. In early February, I received another email saying, Bell declares hikes in dividend by 5%. So previously, we were receiving a dividend of 0.8325, and that now has been increased to 0.875, which equals about 4.25 cents. That doesn't sound like anything to be too excited about, but let's find out how much this increases per month. Let's go back to my chart and change Bell to 0.875. And there we go. From $81.31 to $85.46, which is a monthly increase of $4.15. Sure, that's not much. And granted, I don't have a lot of experience with stocks raising their dividends, but I think this is how it goes. Small increases over time. And during a time where I would understand if a company cut their dividend, I'm looking at you, RioCan, any raise is surprising. So thank you, Bell, for the pay raise. Now let's take a look at my overall portfolio. When I posted my last video, I had just put an extra $40,000 into my account. That extra money pushed my monthly dividends up to $750 per month, with a total value of $143,283. Since then, I bought more stocks, and as of recording, and taking into account the cut and raise, I'm receiving just under $780 per month, with a total equity of $155,500. Overall, I put in a principal amount of $134,500, giving me a return of 15.6%, or $21,000. $15,000 of that is from stock growth, while $6,000 of that is from dividends. Much of those capital gains are from the stocks recovering from their COVID drop. Not fully recovered, mind you, there's still plenty of room for the stocks to go even higher, equal to what they were prior to the pandemic. One stock which has stayed low is Bell, which is fine. You do you, Bell. As long as you keep raising and paying me those dividends, I'll give you all the time you need to go up in value. Will that happen in the next few months? Make sure you subscribe to get notified when my next video is uploaded to find out. So what's my plan moving forward? My original plan was to increase my position in ZWE, BMO's Europe Covered Calls ETF, in an effort to diversify and for the higher yield. But then I thought, we're still in the middle of a pandemic. If there are still stocks that haven't recovered yet, now's the time to invest in those companies. I ended up settling on H&R REIT. This stock dropped back in March 2020 from $21 to $8. That's a 38% drop. And at the time of this recording, the stock is hovering around $13 per share. REITs aren't known for their growth, but because this stock is selling at such a discount, the growth will come from its recovery. And it will recover. They used to be more focused in retail, but in the past few years, they've been expanding into other properties, especially residential. Back in May 2020, they cut their dividend in half, which allows them to have the lowest payout ratio of any REIT at 41%. That means from all their revenue, 41% is paid to investors, while 59% is reinvested into more properties. To give you some context, SmartCentres REIT has a payout ratio of 72%, leaving only 28% of their revenue to be reinvested into their business. So with H&R's historically low payout, it's only a matter of time before they raise their dividend. Now I'm not sure how this will happen. Will they increase the dividend to what it was back in May, or will they gradually increase it over time? Hopefully we'll find out soon. But one thing my portfolio has been criticized about is that I don't own many growth stocks. I have plenty of great dividend stocks, but I'm lacking in companies that are still growing or have a lot of room to grow. I mean, I would love to invest a lot more money in Apple, Disney, Google, but when Amazon is selling for over $3,000 per share, I can't buy that. And as of right now, Canada doesn't have fractional shares. Enter TGED. TD Active Global Enhanced Dividend ETF. This ETF is in Canadian currency, and a few of their top holdings are Apple, Amazon, Google, Microsoft, American Express, and JP Morgan, to name a few. It sells for around $18 per share, and even with all those growth stocks, it still pays a dividend of almost 4%. And because my portfolio is lacking in growth stocks, I want to make this ETF a priority. So far, I've only been able to buy 4 shares, but that will go up by my next video. Just before we end this, I want to clarify something I said in my last video about TFSA contribution limit. In 2021, the contribution limit in a TFSA is $75,500, but that's only the case if you were born before 1991. If you were born after that, your contribution limit will be lower. To check what your current TFSA limit is, search TFSA contribution calculator. Let's go to that. Scroll down to the bottom. I was born 1981 and turned 18 in 1999, so before 2009. And for this example, let's put 0 into how much I've contributed. And how much have I withdrawn? 0. Hit calculate, and my contribution limit is $75,500. Now my oldest son was born in 2002 and turned 18 in 2020. His TFSA contribution limit is $12,000. I suppose they do this to give everyone a level playing field based on your age. So for those of you born after 1991, double check how much contribution room you have. If you exceed your TFSA limit for the year, the excess is subject to a penalty tax of 1% per month. Meaning if my son put in $12,500, that's $500 over his limit. He would have to pay 1% or $5 each month until the next year when his limit is increased. To summarize, RioCan cut its dividend by 33%. Bell raised its dividend by 5%. I'm collecting $780 per month, and from my principal investment, my portfolio has grown 15.6%, or $21,000. I'm reinvesting my dividends in H&R REIT and TD Active Global Enhanced Dividend ETF. TFSA contribution limit is based on age. Well, I'm going to end it there. Thank you all for watching, and until next time.